We have breaking news. Donald Trump just pulled a move that could freeze the flow of money through America's entire banking system. If you've got a checking account, credit card, car loan, or a small business, this affects you. And it could single-handedly trigger the biggest credit crunch since 2008. By the end of this video, you'll know exactly what he did, how it impacts your access to money, and what you must do right now to protect yourself before the banks start locking people out. Now, there's an article that came out that got really swept underneath the rug. Now, let's put it up on the screen from American Banker. Now, banks urged Trump admin to restore CDFI fund staff and funding, because Trump's Treasury just moved to restrict liquidity transfers between major US banks and their offshore accounts. Translations, banks can't move cash around as easily. And that means fewer loans, tougher approvals, and slower credit for everyone. It doesn't matter if you got good credit or bad credit. And you're going to see banks denying credit cards, loans, and mortgages that would have been approved a few weeks ago. And this wasn't done to protect banks, it's a strategic chokehold meant to trap money inside US borders. But that chokehold's going to squeeze you first. But why did they do this? Trump's play is simple: control inflation and strengthen the dollar before the 2026 election. Because his team believes that cutting the international money flow will pull cash out of circulation and cool prices. But here's the twist. When you limit bank liquidity, you don't just slow inflation, you choke credit for regular Americans. Small business owners, frozen. Home buyers, priced out. Families relying on revolving credit, crushed. Meanwhile, the winners, private lenders, fintech firms, cash-rich investors. And they'll charge insane rates because they can and make billions while the rest of us fight for crumbs. And this is where the danger multiplies, because when major banks can't freely borrow from each other, the whole financial system tightens like a vice. Mortgage approvals plummet, auto loan programs pause, and business credit lines vanish overnight. But here's the thing, we've seen this movie before, 2008. Back then, it was bad loans. Now, it's a policy-driven chokehold from the top down. Different cause, same collapse energy. So the big question is, what does this mean for you? If you carry balances, expect rate hikes. If you apply for a mortgage, prepare for rejections. If you run a business, brace for tighter underwriting. Because banks are flipping defense, protecting their liquidity, not yours. And while they tighten up, insiders and private equity firms are quietly buying distressed credit portfolios on the cheap, because they're betting you'll default. They're betting they'll own your debt. This isn't fear-mongering. This is how Wall Street profits during liquidity squeezes. They want chaos. They want you desperate for cash. But let's talk about what you can do right now. All right, so here's how to get ahead before the crunch hits. And there's gonna be 5 of these steps that you do not wanna miss. Number 1, lock in your credit lines now. Don't close them, keep them open for backup liquidity. Number 2, increase your cash reserves. 2 to 3 months of expenses minimum. Number 3, avoid variable rate debt, because those rates could jump another 2 to 3% by spring. And number 4, start a side LLC and open a business checking account, because this is going to give you access to alternative funding sources that most people can't touch. And number 5, finally, monitor your credit weekly. Banks are already reviewing limits and shutting down inactive cards. This is not the time to coast. This is the time to fortify. And if you ignore this, you'll feel it when it's too late. Your available credit drops overnight, your FICO score tanks because your limits shrink, and your applications get denied. And guess what? The government won't bail you out, not this time. They're tightening the system to protect inflation data, not people. So if you think you're safe because your bank app looks fine today, wait until they start pulling liquidity next quarter. I want you to understand that this move marks the start of a controlled liquidity era. Money will no longer move freely, not between nations, not between even big banks, without political oversight. In short, your money is now political. You might think this move only affects big banks, but the real pain is going to hit the local level first. When liquidity tightens at the top, it's the community lenders and small credit unions and regional banks that get starved next. That's the part that people don't understand. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using DisputeBeast, the most advanced AI credit repair software ever created that comes with a 110% money back guarantee. But specifically to Tanya. Tanya's credit score went up 289 points after just one round with DisputeBeast. And Christian Christian's credit score went up 366 points after just one round with Dispute Beast. And let's not forget about Allison. Allison's credit score went up 204 points after just one round with Dispute Beast. Dispute Beast's link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. And here's the domino most people don't see coming. As those small lenders struggle, the big banks start absorbing their loan portfolios, cherry-picking profitable clients and leaving everyone else stranded. So while this looks like a policy move to stabilize the dollar, it's actually a consolidation move. The strong get stronger, the small get swallowed. The average American gets less access, more fees, and fewer choices. But that's not all, because credit card companies are quietly rewriting their risk algorithms as we speak. AI systems are flagging potentially risky accounts, even if you pay on time, and lowering limits preemptively. That's something that nobody else is talking about out there. And you may ask yourself a question, but why? Because banks anticipate a contraction and they're preparing early. So if you see your credit limit slashed or your interest rate spike, that's not random. That's the algorithm reacting to Trump's liquidity chokehold. And it's happening nationwide, not just in specific states, blue, red, it doesn't matter. Everyone's going to feel this chokehold. So now let's flip the script, because every financial reset creates winners and losers, and this one's no different. So if you understand how money flows, this could be the biggest opportunity since 2020. And here's how the insiders are playing it and how you can too. Number one, they're hoarding cash, not hiding it. The rich are parking liquidity in short-term treasuries and money market funds, earning 5+% while waiting for the credit markets to panic. When prices fall, they'll buy distressed debt, assets, and property for pennies. Number two, they're pivoting to business credit. Personal lending is tightening, but business credit is still flowing through fintechs, CDFIs, and alternative lenders. That's why you need your LLC and business checking set up now, not tomorrow, because it's your backdoor to new funding when the consumer side locks up, because it will. And number three, they're leveraging credit strategy. The ones who understand utilization, reporting cycles, and score optimization can qualify for funding when others can't. This is where knowing how to dispute, rebuild, and position your credit becomes real money power. And finally, number four, they're buying influence. Yeah, you heard that right. When money becomes political, access follows power. That means understanding not just credit, but connections. Who your business banks with, how your account reports, and how you're structured will literally decide if you're allowed to borrow. This is no longer a financial system, it's a financial hierarchy. The question is, are you at the top or are you at the mercy of it all? So when people say this doesn't affect me, of course I laugh, because when money tightens, it affects everyone, from billion-dollar corporations to single mom side hustlers. The only difference is who saw it coming. Trump's move changed the game, but now that you know the play, you can choose which side of the squeeze you'll be on. That's the huge difference. But those who understand credit, leverage, and strategy will rise. Everyone else locked out of the game. This isn't about fear, it's about positioning. The system is shifting, and you either adapt or get left behind. Trump's policy just rewired the flow of American money. The next few months will separate those who understand the credit game from those who get blindsided. If you're serious about protecting your credit and keeping access to capital no matter what happens, go to the link in my video description for Dispute Beast. You can fix and build and bulletproof your credit with a 110% money back guarantee. Because when credit tightens, the ones who prepared win big. Now make sure to comment locked if you're securing your future today. Now, if you also haven't heard, there are some major changes going on with FICO and credit scores. Make sure to watch this video right here where I give you a full breakdown on all the recent changes so you can stay up to date. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.